Hello everyone, this is Kalimasha Sheikh. I belong to the tutorial number 4 and our tutor is Haley Meeks and our group number is 3 and our group members are myself, I'm the group coordinator Sheikh Karim Arshad, and there is Sajid Nazir, Arslan Sajid and Jay Kumar. And the case study we have chosen is overcoming barriers to training and funding for SMEs and micro entrepreneurs. We have chosen this subject because of policy relevance and analysis of secondary data utilizing OECD and UK business publications will be followed. This issue was selected since small companies are responsible for creation of jobs and a stable income significantly in the UK. Supporting them is more than necessary right now than ever before because these are going to lead us to a better employment rate and a stable economy. In order to investigate the challenges they are undergoing, we employed a secondary data method. Data from the government, UK government, OECD, and several reliable sources aided in the identification of these issues and proposed viable solutions. Our research employs secondary data from credible sources such as House of Commons Library, OECD, Statista, and Nuffield Trust. Both quantitative and qualitative data got analyzed. Financial inclusion theory and human capital theory were employed to explain the findings. Thematic analysis facilitated grouping of main constraint and conservative. Comparative discussion with international models enabled deeper understanding. As you can see the table, the 6-week period concentrated primarily on UK SMEs with the reference to successful global strategies to offset training and financing gaps. SMEs are the most frequent type of companies globally. 99.9% of private sector enterprises have been constituted by SMEs alone in the UK and provide employment for approximately 61% of the workforce. On the other hand, large organizations such as NHS employs 39% of the workforce. SMEs account for 90% of businesses worldwide and made contributions between 50 and 60% to GDP as reported by the OECD, and as you can see the chart. We have noticed from the data we have collected from UK business publications and OECD, it illustrates that a vast majority of SMEs struggle through poor education infrastructure. And UK small business authorities have not improved financial skills according to Statista. They have been the same, they have been stuck for a very long time. They haven't improved their methods, they have been using their old traditional method all over again and again. So they have been the same, they have been stuck. According to Lloyd's Bank data indicates that approximately 11.6 million UK adults need digital competences. Human capital theory demonstrates that investment in knowledge and expertise will enhance enterprise success. There is no doubt about it. On that basis, the theory advocates training initiatives. They need training. They must be trained up to the modern economy right now, the modern methods that you use for modern economy. As that measures can lead to greater SME achievement, economic inputs, and sustain long-term profitability, particularly among disadvantaged regions. And now my friends will take over, and thank you.
Hi, I am Sajid Nazir. I am the student of MSc Management with Sustainability. We are discussing the group presentation, and I will continue the previous, which my friend, which my colleague group member has been presenting the other slides. I will discuss the barriers to fundings. When we discuss the barriers of funding, we will find out that the most SMEs, particularly startups, are excluded from funding because of bad credits or no assets. Statista indicates that 43% of SMEs in the UK experience banking access problems. The World Bank points out that the smaller business pay more interest compared to large firms. Financial inclusion theory states that the access to fair and affordable financial services reduces inequality and fosters growth. This theory advocates for enhancing financial access as a mean to foster SMEs as well as enhance economic resilience. If we discuss, the next is the uh, overview of OECD scheme. The OECD has fosters SME training initiatives that emphasize financial literacy, digital competencies, and entrepreneurship. These are extensively used among 35 plus member nations along the UK. The intention is to boost the potential of small businesses using affordable and focusing training. Performances gets assessed concerning participation level, productivity, SME survival, and GDP contributions. Outcomes indicates enhancements in management of business planning, digital take-up, and financial management, particularly in nations with long-term support mechanisms. The next is the case comparison. If we discuss the comparison, we will find out that the KfW model by Germany provides SMEs state-granted low-interest loans, reducing risk and enhancing credit availability. In comparison, SMEs of the UK experienced elevated rejection rates of about 25% compared to 13% of the Germany for the European Investment Bank. If we discuss about the India's startups, we will find out that India has financed more than 95,000 startups, providing finance and training. These international models demonstrate well-structured public-private models with funding supplemented by training work. The UK would be better off modeling analogous long-term inclusive approaches to finance SME growth. And these are the data, SME employment contribution data. The line graph, it's a graphical data. If we see in this graph, the line graph indicates a consistent rise in SMEs growth between 2018 and 2023, projected from 5.4 million to 5.6 million. It indicates the significant contribution of SMEs toward economic resilience, even in times of adversity such as COVID-19 and Brexit. In the column chart, if we will see that it has been indicated that SMEs currently account for more than 52% of the UK's GDP, demonstrating their importance beyond job creation, particularly in local developments and supply chain linkage and innovation. These statistics support the case that spending in SME development and assist infrastructure can bring wider microeconomic benefit. Next is the SME employment contribution, which shows that this is also the graphical data, which represent that declining SME lending trend. Particularly during economic instability such as COVID-19 and Brexit, the particular table of this paragraph shows that the micro enterprises have the highest refusal rates, which underscores the necessity of customized financial assistance and inclusive credit regulations to support SME development. The other slides, uh, which is uh, about the financial literacy and impact. If we discuss the financial literacy, we will find out that the greater financial literacy, which is associated with improved survival, uh, poorly literate business collapse sooner. Uh, it's obvious, which is poorly literate business, which will very soon collapse. OECD and ONS affirms this high correlations. This infographic identities a direct relationship within SME survival and financial literacy. Financially literate led businesses are as much as twice as likely to survive for more than 3 years. If we look the UK ONS data, we'll find out that OECD support this trend, indicating literacy training may be a key driver for long-term entrepreneurial achievements. These are the some discussions of our presentations. The next slides will be discussed by other colleague. Thank you so much.
Hello, my name is Muhammad Arslan Sajan. I continue the previous discussion is that training enables entrepreneurship to make better performance, develop sustainably. Human Capital Authority relates the credence to the assertion that developing skill enhancements productivity, relevance to the knowledge gathering offers SMEs and sustainable competitive advantages enables to transform the inflating market. Trainers community-based training not only the strengthens individual firms but also increase income generation, job generations, resilience to entire local economies. The next slide I discuss about the financial literacy implementation. Financial literacy implementation is basically an important role is obtaining operating business finances. It requires the business with knowledge to make the sound judgment and the budget planning. The OECD's financial education framework offer the holistic approach to amending the financial literacy in education models and adult learning program, ensuring the economic sustainability for long terms. And this next slide is the barrier to funding assess. The financial inclusion theory states the increasing underserved communities. This data collect the OSCE research paper 2024 financial inclusion theory demonstrates delivering underserved communities access to the evaluate financial services. Digital identity with mobile banking is revolutionary technology enhancing financial access. Bureaucratic procedure though are still major hurdle tending to the slow loan approval and dissuading entrepreneurs. And the discussion is continuing to overcoming funding barriers is the next slide. Government assesses the guarantees of loan, decrease lender risks, and stimulating greater financial support for SMEs. Microloan program with the terms of feasibility are important implemented for small businesses that lack collateral bodies. Blockchain and fintech technologies make the lending procedure more effective and ensure being accessible funding for underserved entrepreneurs. My recommendation of this presentation and this data is secondary research is the training solutions. It is important to localize training program based on OEC models, and localized training OEC models have facilitated to address the requirement for particular communities. Engagement with the local councils and NGOs increase accessible and outreach. And the second recommendation is the government interest subsidies can bring more accessible to SMEs and offer incentivizations for banks for focusing on lending to small businesses, streamlining the loan application system, the mobile app enhancing accessibility and accelerate funding allowances for entrepreneurship. Thank you so much. And my next colleague to discuss.
Good morning, everyone. My name is Jai Kumar Anandan. My student ID is 230235579. In this slide, we're gonna see recommendations, stakeholders' roles. Government body has a significant role in offering funding and policy support. The private industry can assist through CSR initiatives and mentorship. Enabling entrepreneurs to develop financial institutions can provide risk mitigation lending to enable SMEs. The next slide is about cost proposal. The cost of implementing national training program is estimated at 4 million per year, covering content development, delivery channels, infrastructures, and outreach. The ROI in the long term is substantial, comprising enhanced SME success rates, employment creation, and entire economic development. In this slide is about funding sources. Financial for training and SME assistance can be obtained from various sources. The UK government Department for Education and BEIS provide extensive financial supports. OECD offers development grants for international projects. Fintech collaboration can secure CSR funding, while innovation funding like Nesta and UKRI is critical in driving new business solutions. Now we're gonna move to last slide. This slide is about conclusion. In conclusion, the SMEs and micro entrepreneurs are key to economic development, but are confronted with serious challenges such as limited finance, poor finance literacy, and inadequate training. This needs concentrated efforts from the government, financial institute, and private sector operators. Future research must aim assessing the effect of these measures and responding to evolving needs of entrepreneurs. Now the last slide is about the reference list. These are the reference list. Now I'm gonna finish my presentation. Thank you.